doing business in Africa. You can't afford to be without Africa Investor.
Welcome back to FinTech TV's The Daily Download. It's a big first step for sustainability in Africa. The first ever African Nationally Determined Contribution, or NDC, Investment Award will be taking place on the 8th of November at COP27 in Egypt.
And this will award nations with funding for sustainability projects. They'll recognize public and private sector efforts to uphold goals set by the Paris Climate Accords.
Joining us now to discuss and give us more insight on infrastructure investment on the African continent is Hubert Danso, CEO and Vice Chair of the Africa Investor Group. Glad to have you on the show this morning. Let's start with this. Just tell us a little bit more about the NDC Award. This must be obviously a very, very exciting time for investors. What achievements are you honoring?
Yeah, well, thanks very much. Always a pleasure to be here, and I think you're doing some fantastic work over there. So for those who don't know, the NDC stands for Nationally Determined Contributions, and that is essentially all of the ambitious targets that are linked into the Paris Agreement that governments around the world make. And, you know, this big summit that happened last year in Glasgow called the COP Summit, the Conference of Parties Summit, is happening in Africa this year. We are going to be there, you know, giving a really big African showing of the value that the African institutional investment community can bring. And a key part of that is actually really beginning to look very specifically at what specific projects, nationally determined contribution projects, have governments across the African continent put together that will be attractive to the investment community. So we actually launched the NDC Investment Awards, which, as you say, will be hosted on the 8th of November with the International Chamber of Commerce at COP27 in Sharm el-Sheikh, to really look at, you know, what are those projects that can really attract this money. You have to remember that Africa's nationally determined contribution investment projects value about $3 trillion. Now, this $3 trillion is required for these projects by the year 2030, so that's 8 years. Now, if you marry that with the fact that the rest of the world, or the world together, has only been able to mobilize $2.8 trillion in the last 20 years, that's the year 2000 to the year 2020, it means that the investment community really have to step up, governments have to step up, and we need a new form of what is currently being described as institutional investor-public partnerships. So our 10 categories of awards have effectively really shone the light on the leading institutions, the leading governments, the leading innovations, the leading green technologies that are available today for investors to be able to allocate capital to.
And Hubert, can you also give us a better understanding of the kinds of criteria that organizations or nations need to meet in order to secure these awards?
Yes, to secure these awards, they've really got to demonstrate that they are private sector and investor friendly. You see, the continent has come from a long history of being a development initiative, if you like, for the Bretton Woods institutions. So a lot of the funding that has come to Africa historically has been concessional finance. So one of the points of departure for the criteria for our awards are really to focus in on projects that are really designed for the private investment community. So for the investors as equity owners, as opposed to just debt providers and concessional finance. So that was a very big thing. The second thing is the capacity for these particular projects to act at scale. Two key words that come out in terms of, you know, really addressing climate change, really addressing the 1.5 degree and net zero target is things need to be done at scale, and the capital needs to be deployed at speed. So that was a second big criteria component there. And then the third element is really looking at the local level of resources, whether it's going to be local pension funds, local sovereign funds, local banking and investment community, and the local private sector, the role that they're going to play, because ultimately they're going to be the partners in the execution and delivery of these particular projects, and hopefully the scaling up of these particular projects. So those are some of the big issues. And we're looking at tailoring, you know, the criteria really looked at how these particular projects have been structured to align as best as possible with long-term investors, investment policy statements and mandates and risk-adjusted return criteria.
To that last point there, if we pull back a little bit to more of that bigger picture, why is it a critical need to attract international investment to the continent?
Well, when you look at the size of the reality, we're talking about $3 trillion for our investment requirements for our NDC projects in the next 8 years. But then when you look at the balance sheets of all of our traditional financing partners, all of the multilateral development banks, the regional development banks, the development finance institutions, their total balance sheet of our traditional financing partner is a collective 1.5 trillion in total. So we are really now having to recognize that we need to target that $200 trillion pool of global institutional liquidity and capital, who are going to be net beneficiaries of, look, all of the minerals that are going to go into the batteries, into the wind turbines. Majority of them sit in the African continent. So capital has a real opportunity to come in, invest in some of these opportunities, be part of the value addition process, build those critical industries, and then sell them into the $10 trillion per annum and growing green, clean industrial economy. So it's a win-win really for the continent to unlock and add value to its resources. It's a win-win for investors who can actually invest in some of these assets. Don't forget, the rest of the world has to really decarbonize, and all the regulations are going to penalize highly intensive manufacturing processes for a lot of these industries. Whereas Africa, with all of its natural capital, and that equals about $4.8 trillion worth of carbon credit headroom between now and 2030. Wow. How can we take our natural endowment and securitize it in such a way that it's great for investors and it's great for development and it's great for Africa's participation in the global green economy? That's really what we're doing here.
A really good framing of that picture. Hubert, really appreciate your time and your insight. Hubert Danso, CEO and Vice Chair at Africa Investor Group.
Doing business in Africa, you can't afford to be without Africa Investor.